Friday, April 29th, 2022, Maneco 64, home of alternative economics and contrarian views. So it looks like stagflation is back, and it's official as well. We had some GDP data out of the US yesterday. And we're going to look at how they calculate the GDP, at the formula for GDP. And I'm going to show it to you that GDP, or economic growth, has been really negative for the last couple of years, at least in the productive private sector of the economy. And I'm going to, again, try to expose the Keynesian fallacy, and I will give the Keynesians a little bit of credit, of course, for their initial idea about government spending. Before I start, though, I like to again thank all of you for supporting the channel, all the new subscribers as well, for your interest in the channel, and hopefully I'll be able to keep it up for you guys and provide a good content and build a community, or grow the community. As Graham Hobbs, a long time supporter of the channel, said, this is about having a community. So thanks again. So we just had some data yesterday, of course, for US GDP for the first quarter, and it shrunk by 1.4% in the first quarter, GDP. Usually when you have 2 consecutive quarters of negative GDP, they call it a recession. And I would argue, though, if you look at the GDP formula of how to calculate GDP here, you can see that GDP equals consumption plus investment, plus government spending, plus net exports. And I saw yesterday one of the articles I read about GDP, the data that came out in the US, and it was from the FT. They are uber Keynesians, of course. They said, domestically the economy is doing really well, because the reason why GDP was negative is because the trade balance was a lot, the deficit, that is, was a lot bigger, so it took away from GDP. Well, in my book, that shows that the economy is not healthy, because it shows that Americans are spending more than they produce, and they're actually having to import. So I think that's a bad thing. But the important thing about the GDP, I would say, is the fact that it includes government spending. And being a proponent of free markets, small government, and the Austrian School of Economics, I believe that the best thing for prosperity in a society is to have as small government as possible, that government does the minimum to keep law and order within its borders, of course, not all around the world, and that the private economy, you and I and everyone else, be left alone as much as possible, so we can voluntarily interact commercially with each other and create value, wealth, right? So that's the real wealth building economy. Government can only spend when they take it away, they take the wealth away from us, and basically take that wealth and redistribute it to another sector of the economy that they favor. So when you include government spending as a positive thing, as gross domestic product, it's like double counting, I would say. And the other thing that's been happening since, well, for 20, 30 years, is that rarely any of the major Western countries have run balanced budgets, the governments. So they've been running deficits. So what that means is that aside from the tax they take from us to spend, they're borrowing even more. And that's not really production, and that makes the GDP number look artificially high. I would give Germany a little bit of credit on this front, because prior to the COVID crisis, they were running a budget surplus. They had dropped their debt to GDP to below 60%. And that's how you grow your debt, though. The debt to GDP is by running deficits every year. It accumulates as debt, of course. But in the UK and the US, well, we've been running deficits for time immemorial. I remember George Osborne, when he took over as chancellor in 2010, he said, this is going to be my budget for the next few years. And by 2015, he said, we're going to have a budget balance or even a surplus. And here we are in 2022, and we're running a deficit of almost 10%. And during the pandemic in 2020, 2021, we were running a deficit of almost 20%, because the government was borrowing more than it took in. Well, and it was borrowing from the future, of course. And this is another reason why we've got the inflation. But my point here is, can you imagine what the GDP growth would have been if we hadn't been running these deficits? I mean, it would be even more negative, because they wouldn't be adding the extra borrowing and spending by the government. And we all know that when governments borrow and spend and have their own projects, it's never really a wealth creating exercise. Yeah, you go back in history, it wasn't government that really created anything. It was government that hijacked everything. The railroads, the trains, all the inventions were like done in the private sector, not by government. So you just have to look at the US stat clock, for example. Right now it says that the actual budget deficit is 2.2 trillion and rising. And the gross domestic product is 23.6. So you just do a little bit of math, and that comes to 9.2% deficit. So if you think about that equation, that extra 9.2% of deficit spending is going into government spending there in that equation. So if you take that minus 1.4 GDP shrinkage you had in the first quarter, and you take the 9.2% deficit that the government is running, you divide that by 4, and you add that to minus 1.4, you get minus 3.7. So I would say that that's the real GDP growth, or negative GDP growth, that we're seeing. And you can do that for all other countries. So that's why governments, when economies go into recession, that's why they resort to this Keynesian deficit spending. And I said in the beginning of the video that I was going to give the Keynesian some credit, or Keynes. I think his idea was that the government spending was there to be just a one-off in case, or when you had business cycles that kind of went into a recession, to kickstart the economy, as the Keynesians say. And then when the economy started growing again, you'd pay off, run surpluses to pay off that deficit, balance everything off. But the thing is, temptation is really something that we are all victims of. And I think personally the best way to not fall into temptation is not to do it, because once you do it, you can't stop. And I think that's the fallacy of the Keynesian philosophy. You start using deficit spending and you can't stop. and it comes to a point where we are right now that the deficit spending has been so huge that the government balloons and balloons, and they dig themselves into a bigger and bigger hole. And that's why we keep hearing politicians all around the world, especially in the West, saying, oh, we're gonna help the consumer because of the cost of living crisis. And how are they gonna do that? Well, more deficit spending. And that, of course, debases the currency because it creates inflation, and it gets even worse. So unfortunately, a lot of our politicians and people who are running things are not really economically literate. They haven't studied the Austrian School of Economics. Mainstream academia, universities, even Wall Street, City of London, they all focus on the Keynesian paradigm of deficit spending. And the only hope, though, we've got is that things that are not sustainable can't keep going on forever, and there'll be a point where this can't go on anymore, and we're gonna have to go back to reality. So let's take a quick look at the markets now. It's 8:15 a.m. London time. So we've got spot gold up $17 actually at 1911. The high's been 1913 and the low has been 1892. So we're up almost 1%, just under 1%. Spot silver is at 23.44. It's up 29 cents or 1.25%. The high's been 23.49, the low 23.11. The Dow future is down 56, just under 0.2%. The NASDAQ future is down 114, 7/8%, and the S&P 500 is down 0.5%. I saw the stock market rebounded yesterday quite strongly. It almost gained back what it lost the previous day. And some people were puzzled because you had this negative GDP number. And how come the Dow went up? And you might think in the past, well, that means because the economy is slowing down, they're going to be less of a hawk at the Fed. They're going to maybe not tighten so much, and that's going to help the stock market. But I looked at the bond market and yields were up yesterday, so it doesn't make too much sense. And the other thing as well, with the dollar as strong as it has been against the other fiat currencies, it's really weird. I think it's just volatility, and I don't think the stock market is out of the woods yet. So FTSE 100 index is up 0.5% at 75.32, and the Euro Stoxx 50 is up 1% or 38 points. Yes, the dollar has rallied really strongly against the other fiat currencies, but now we're seeing a little bit of a reversal this morning. Dollar is still relatively strong compared to maybe a month ago. Right now, though, the pound is up just over 0.5% at 125.30. The euro is up 0.5% at 105.50, and the dollar is down 0.5% versus the yen at 130.30. The dollar is down 0.5% versus the yuan at 662.40, and the dollar is down 0.1% versus the Swissy at 97.08. Aussie dollar is up 0.2% at 71.44. The dollar is down 0.5% versus the loonie or Canadian dollar, 127.46. And the Kiwi dollar is up 0.5% at 65.15. To the general commodities, WTI crude is unchanged, but we're almost back to 105. It's at 104.80. Brent crude is up 1/3 at 107.70. High-grade copper is up 1% at 447.50. U.S. nat gas is down 1/3% at 6.88. To finish off, let's quickly look at the 10-year yield in the bond market. 10-year yield is down a little bit overnight. It's down almost 3 basis points at 2.835. The high's been 2.863. And in terms of economic data for today, we actually saw the nationwide house price index in the UK. It came out up 0.3 month on month. It seems like a good number, but it was actually expected at 0.8. So maybe we're starting to see a slowdown in the rise in the housing market, in housing prices. We'll have to see. I made a video recently saying that I think, yes, it's going to be tough for house prices to keep going up, mainly because interest rates are rising, bond yields are rising, and that's going to affect mortgage rates. We've also got the rising cost of living that's hurting consumers. They won't have as much to spend if they're looking to buy a home, because they have to spend more on food and utilities. In terms of the US, have we got anything today? Let's have a look. Yeah, we've got the core PCE index. That's what the Fed looks at. That's out at 8:30 a.m. New York time or 1:30 p.m. London. It's expected to drop from 5.4 to 5.3, but that's the core number. Let's have a look at the headline here. That's the one we really want to see. Well, they don't have an expectation for that one because they don't want people looking at that. But the previous one was 6.4. The core one doesn't include food and energy, which I would say are really important parts of life. Anyway, if you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide. And if you haven't subscribed to my channel, think about subscribing. So I wish you all a great weekend. Take care. Bye.